There's no other way to say it. Now, there is one positive thing that's happening, and we'll... Hey traders, I hope you had a good trading day. It was a massive bloodbath, and we're going to go over it and explain exactly what transpired here today and what happened. As always, subscribe to the channel, click all notifications, because what we go over here is extremely timely. The first one I want to focus on tonight is going to be Apple. And I just want to go through a couple things and give some people some tips. First tip I'm going to give you, see this 5-day moving average? In this environment, unless you're above the 5-day moving average, don't even think about buying a stock. Okay, you can be buying them if you're looking for a day trade to scalp it to get out. But if you just are simply using this 5-day moving average, it would have kept you out of the majority of moves down. I use a simple moving average. You can use whatever you want. And EMA is going to front load the first 3 days on a 5-day moving average. Seems kind of silly. So I'm going to stick with the SMA. But if you look at the greatest moves, they were always over the 5. And the moment that it broke the 5, you had pain. Right? Over, more pain, over, pain, and it legitimately kept you out of the trade for the majority of the time. So continue to utilize this, especially when you're in an environment when you're under the 200, you're under the 50, you're under the 21. Okay, if you're under all three of those, especially the 50 and the 200, use the 5-day moving average. Now, let's talk about Apple and what happened today. So we've been trading up, forming this H. My hope was that we were going to form an H and then rally, like kind of round and then try to rally back up, right? And that's not really what happened. So what I was looking for was something like this, and then maybe down, and then, maybe back up, like a failed H pattern. That's not what we got at all, is it? So what we had today was news hit that China is telling suppliers to start slowing their shipments of supply issues to build iPhones, not just for Apple, but for all phones. So that becomes a large issue, and that's when you saw the movement change. Let's get to that in the 15 minutes so we can focus on what's going on, and then we're going to talk about what's going on after hours. So you can see very clear, this is how the day started, and then all of a sudden we just started breaking down, and then you formed this bear flag right here. And then after you broke that bear flag, that was it. It was just down every day, just had reversal after, or every 15 minutes, reversal after reversal. Here, boom, right? Bearish engulfing. Not really a bearish engulfing, but a reversal pattern nonetheless. As soon as you broke here, back down, tries to form a bearish or a bullish hook reversal at the end. Just fails miserably. So what do we do with this? Well, what we need to do is just be aware of what's going on. This close is the lowest close that we've had, okay, since you're going back to October. So in 2022, this is it. It doesn't get any worse. If you're closing here, it's unrealistic to think that you're not testing the low, which is 138.80. If you break that low and you break 138, we're going a lot lower. So keep that in mind. If you start breaking 138, you're going lower. So you just have to start looking for levels. So this is a very simple trade. Okay? I would still look at being on the short side, especially after Csco's earnings, which we're going to cover in a moment. But if I just take that low out tomorrow, I would be putting the trade on and watching these levels. So 139.90, and I would look at shorting Apple. That's just, it just looks nasty. I mean, there's really no other way to say it. Now, Tesla, it's very similar, okay? Why is it similar? Well, here's your H. It was rounding up, forming an H. Started forming this ski slope on the way down. Here you are. Make sure you stay to the end because we're going to do the indexes. Look at this close. Single worst close you've had in 2022. Is today. So there's no other way to say it. Now there is one positive thing that's happening, and we'll talk about that when we go over the cues, but just focus on that. You break 700, that's going to just, I think you break 700, you go into 675 fast. I really do. I really believe that. So that's how I would be leaning. At least 680, you're getting there pretty quickly. So keep that in mind. I want to go through these trades because they're coming out with earnings first thing tomorrow morning. So whether you're watching this today or you're watching this tomorrow, please comment on these videos because that's why I'm going over some stocks that are coming out with earnings tomorrow. We had some requests for them. So I do read every comment and I will respond to every comment in time. It just takes me a little bit of time. But see that level? So we broke. All you're going to want to do tomorrow is watch this. Now we're all aware of why Kohl's is doing this. And we could kind of talk about the entire sector today and how that sector completely broke down, right? You're down another 6%. I can't remember the last time we saw a 6 or 7% move down just in consumer discretionary in a day, but here it is. So now you have coals. All you want to see tomorrow, if you break this 42.29, if you start trading up on the news for some reason, as if it's not as bad as we expected, right? And you start trading up, you're going to want to take a look at this, okay? And putting a short on there. BJ's. Now, BJ's was a subsidiary of Walmart, right? They had a lot going on together, and I'm not really sure of the entire context of how much they have going on together anymore after the spinoff, but I would assume that there's still some ties there. This move down after the Target news is extremely telling going into earnings. 52 3/4, watch that level tomorrow. If you break that, this has a long way to go down, a long way. So a lot of these stocks seem to be heading towards these pandemic lows. Now, I'm not suggesting that we're going to get to 18, 19 tomorrow. I'm just simply saying that a lot of these stocks are breaking down, and they're breaking down hard. So if we're on the bear side of the 5-day moving average on the indexes, I want shorts. I do not want to be looking at longs here. So, and as I've been doing that all year trading, it's kept me out of, one, a heck of a lot of problems, and two, it's got me in the right stocks to make money. Now, Cisco came out with earnings and they were abysmal. It reminded me, I cracked a joke. Oh, I thought it was funny, but that this was kind of like 2000. Now, I can't remember the last time I cared about telecom equipment stocks. And here we are caring about telecom equipment stocks. Look at this move down. To me, this is pretty telling. And I think that you're setting up here to break down even more. But we're going to have to see, just caveat on this, I already have a small short on that I did after hours on this. This line is my demarcation line to add to it. I added some right here. I just left it on starter position, so I watch it. There's no way that this is going to make its way back up here. Take a look at what transpired. Cisco came out and said they see fourth quarter revenues -1% to -5.5% versus plus 5.7%. EPS, they're looking at 329 to 337 versus 341 to 346. That's not great. You're looking at revenues coming in at 12.8 versus 13.34. Again, this is not where you want to be. So you need to understand that if you're seeing these kinds of companies and you're seeing this kind of contraction, you need to stay away from it. For me, what I would recommend, and people will be like, oh, that can't happen. It can happen. But what I would focus on is the level that I just gave. And if you see it break that level, I would be looking at adding to the short position. So again, I started the short position here already. It's about a 10-15% position on what it will be. But when you break this level, I will be scaling into this. This can get really ugly. If you have a projection for positive growth and then you don't have that growth and you have the exact opposite of that where you have negative growth, not even slowing growth, but negative, these can get really nasty, like Janet Jackson nasty, because they're not really doing what you expected them to do. Now, let's go through the indexes here and let's just talk about this. You know, one thing I was talking about earlier was these lines, these trajectories, they're getting worse, right? So as this angle gets steeper and steeper, the drop happens faster and faster. So I'll say that again. As these lines get steeper and steeper, the drop happens faster and faster. I put this up as kind of a running joke. Straight down's not a pattern, but it sure looks like it's about to happen. So again, the Q's now closed at a new year low. If you have to go through on the Q's and take a look, let's get rid of this news writing. And we were doing okay until we came out with the slowdown in the computers. And then based upon that, energy came in and that was the end of it. But if you could see where you're at, I mean, you'd have to go all the way back to 2020 to get to a level that you're at right now. So I do not see how something like this holds. Could you bounce up and then come back? Absolutely. But here's what I want you to just remember, and it's really been saving us a lot in the trading room, and I think it'll save you a lot too. So what we're seeing is we're seeing these levels right here, okay? Every time you're above the 5, I've been trying, because eventually stocks will go up again, right? But we don't know when they're going to catch. So I don't mind losing a little bit of money each time and taking 1,000 little paper cuts. I'll do it all day long, because eventually I want to be in this. And I want the best price. So I'm willing to take that risk for short-term trades. It's just not working. But when it does work, you can do exceptionally well. If you did this trade here, right, so you keep doing the same trades over and over again, right? You do what works. If you did this trade here and you made 13%, or let's just say slippage 10%, it's eating the cost of all these on the way down. So it doesn't really matter. But what I'm getting at with this sitting right here, closing at the low, and Csco's earnings tonight, there's no way that this is going to hold. That's my opinion. Now, do you gap down and then rally? I have no idea. But for the VIX to be sitting at 31, while the NASDAQ is down 5.5%, is just beyond ludicrous. So just keep that in mind. And you're starting to see some sectors, in my opinion, I want to point these out more than I want to point out the stocks, but we don't talk about the 10-year. For the consumer staples to blow up and be down 7%, for XLY to be down 7%, it's staggering that you're seeing them down these levels. For these kinds of companies to be blowing up the way that they are, 25-30%, like it's nothing. I mean, these are huge conglomerates and they are just blowing up. So when you start seeing this, there is a part of me that feels like, okay, you're getting to a point where they're throwing everything out the window. And when they do that, take a look at like Philip Morris. Even that is, or Altria is even coming down on that news, and so is Philip Morris most likely. When you start to see that, just be aware, okay? These are not normal moves. Clorox, that is not a normal move for Clorox. This is not a normal move for Procter & Gamble, okay? So when you start to see this happen, start paying attention, because one, either someone's getting washed out of the market, or two, they're just going to basically sell everything and go to cash, which could put in a short-term bottom. But technically speaking, I don't see anything to support that we are anywhere near a bottom. We're not even oversold. Let's look at this. Let's finish with the 10-year. Okay. The 10-year actually rallied, which is showing you that they are buying bonds. So that's actually good, because you're actually putting money to work in equities, or putting money to work in bonds, which actually can help. But we need to see something before we assume that we're just going to bounce. I thought we may have seen something yesterday, getting above this for 3 days in a row on the 5-day. Haven't done that since March. And this is what happened, just the flim-flam today. So let's see what tomorrow brings. Take a look at those levels. Lean more towards shorting tomorrow. Even buying puts is very difficult right now with the implied volatility. Have a great night, everyone, and trade to win tomorrow.